In a dramatic turn of events that could reshape the global energy landscape, oil prices surged by 1% after former U.S. President Donald Trump claimed that India has pledged to halt its oil imports from Russia. But here's where it gets controversial. While this move could tighten global oil supplies and boost prices, it also raises questions about India's energy security and the broader geopolitical implications of such a decision. Could this be a game changer in the ongoing efforts to isolate Russia economically? Or is it a risky gamble for India's domestic needs? The announcement came on the heels of Trump's statement that Indian Prime Minister Narendra Modi had assured him of this commitment. This development is part of a broader U.S.-led strategy to cut off Russia's energy revenues, which are crucial for funding its military operations in Ukraine. And this is the part most people miss. While the U.S. is pushing its allies to stop buying Russian energy, countries like India and China have been major importers, citing their own energy security concerns. India, in particular, relies on Russia for about 1/3 of its oil imports, making this decision a significant shift. The impact was immediate, with Brent crude futures rising 54 cents, 0.87%, to $62.45 per barrel, and U.S. West Texas Intermediate WTI futures climbing 57 cents, 0.98%, to $58.84 by 0430 GMT. However, these gains come after both benchmarks hit their lowest levels since early May, due to U.S. China trade tensions and warnings from the International Energy Agency, IEA, about a potential oil surplus in 2025, as OPEC Plus and other producers increase output amid weak demand. Here's the kicker. While Trump's announcement has lifted prices, the Indian embassy in Washington has yet to confirm Modi's commitment. Meanwhile, sources suggest that some Indian refiners are already preparing to gradually reduce Russian oil imports, signaling a possible shift in policy. This comes as U.S. Treasury Secretary Scott Bessent told Japan's finance minister that the U.S. expects Japan to follow suit and stop importing Russian energy. The UK has also tightened the screws on Russia, announcing new sanctions targeting major energy companies like Rosneft and Lukoil, as well as key infrastructure such as oil terminals, tankers in the shadow fleet, and even a Russian-owned refinery in India. These measures aim to further isolate Russia's energy sector, but they also highlight the complexity of global energy dependencies. Now here's a thought-provoking question. As countries like India and Japan face pressure to cut ties with Russian energy, how will they balance their own energy needs with geopolitical demands? And could these actions inadvertently push oil prices higher, affecting consumers worldwide? Let's discuss in the comments. Do you think this strategy will achieve its intended goals, or are there unintended consequences on the horizon? Looking ahead, investors are eagerly awaiting the weekly U.S. inventory data from the Energy Information Administration, EIA, following mixed reports from the American Petroleum Institute, API. While distillate inventories, like diesel, have fallen, suggesting stronger demand, crude oil and gasoline stocks have risen, indicating sluggish demand in the U.S., the world's largest oil consumer. Analysts predict a modest increase in U.S. crude stockpiles, but the market remains volatile as these geopolitical shifts play out. As Tony Sycamore, a market analyst at IG, noted, India's potential withdrawal as a major buyer of Russian oil is a positive development for crude prices. But the real question is, at what cost? For India, for Russia, and for the global energy market as a whole. Share your thoughts below. This is a conversation worth having.